Holy moly, all I see out in the charts is hammer candles, which could suggest a higher move in the markets. Was that the pullback? Was that February the pullback? Well, we're going to be going over multiple different charts today to get a good idea as to where the market might be headed next. This is the Daily Stock Market Brief. My name is Michael Silva. Today's date, February 22nd. We got a lot to go over today. We're going to start off with stocks, the indices. We're going to go into indicators, commodities, the dollar, bonds, and yields, and then wrap it up with a conclusion with some individual charts that completely just took a bloodbath of a beating. And they could present potential good opportunities if you're willing to, risk some capital. But, it's hard to determine. We'll talk more about that in the conclusion section. Let's just go ahead and get into today's show. Alrighty, welcome back. We're going to start off with the indices, okay? Hammer candles all around, right? Thumbnail said hammer candle, hammer time. Here we go, WILSHIRE. Whoa, holy moly, look at that thing. Just a so first off, we opened, and this was look at this. One huge, solid red candle. Now, this is the WILSHIRE 5000 composite. We look at this because it's a good idea and a good picture as to the broad market, what's going on. So it's good to look at this and map it out before we kind of dive into other stuff. What I really wanted to point out here with these lines, this is where the market opened up this year. So in 2021, you can see it opened up right here. We went a little bit lower. We came back and tested the yearly support, and then we found support, and then we found some sort of recovery bounce right from there. Now we're seeing it really come back down into that level. The MACD did cross over a bearish crossover right here at this level, and we saw that weakness come in. The last time it crossed over, we saw the weakness come into here. This hammer candle, okay, this is important to map out. One, it was well below the 20-period moving average, the short-term moving average, but it was bid back up and brought back into play. We are still below the shorter-term time frames, 5 and the 10 EMA, and there was a bearish crossover between those two, but that's very, very short-term. Nothing to sweat unless if we started getting these moving averages cross below the 20-period moving average. Now, what do we got to look for here? If we start getting back above 41,500, this could suggest this was the pullback, which is not a small pullback, okay, from 42,250 down to a low of 40,250. So a 2,000 point drop is not, it's not small, but it's not also huge. But given the context, it was a powerful move. So if we start getting confirmation and move back above, this could be the bottom here for this specific little pullback to see continuation of new highs. So we got to keep an eye on that. This is such a large range candle. It's going to be very, very hard to determine if it starts continuing breaking down. If anything, we would see some inside trading days and potentially head lower. But once we crack below the low of this candle, then that could suggest more of a move down to the yearly open. But we're not there yet. And this long upper wick, so that was all people scared. And then all of a sudden, buy, pushed it all the way back up to the point where we were only down 0.08%. Crazy price action. S&P 500. Whoa, look at this. Big red nasty candle, okay? And then immediately got bid right back up from the 50-period moving average and the lower range of this channel. There's a lot of confluence there, okay? We're back now above the 20-period moving average too. So was that the pullback? And now we're going to see a continuation. Well, guess what we need to see? We need to see a confirmed close above 3,900. If we start seeing that, that could suggest that we move higher to all-time highs, at least go to try take out 3,950. Now, keep in mind, when bear markets are in play, which, by the way, this is very bullish context still, okay? So everything is very bullish context. But you got to understand, when markets top, when they start topping or start going into bear market territory, you see huge bull rallies within big drops. So you can see a gap down, it moves lower, but then you see huge moves to the upside. What you need to watch out for is this: if we start making lower lows and lower highs. Currently, we're still making higher lows and higher highs so far, right? So now if we take out 3,950, that's going to confirm that this market is still moving forward. But the immediate resistance right there is 3,900, so we have to recapture that level. 30-minute time frame. Look at this. Big gap down, huge move lower, oversold completely, right? We'll talk more about this on the Qs, the NASDAQ section. Nasty candle, bam, to the upside, boom, and then just literally just straight up into the air for the remainder of the day. But then that last 30 minutes, we did close back below the 200 period, back below the 50. Now, you got to be careful here because look at the price action, what it's been doing. It's been gapping down, ramping up higher, gapping down, ramping up higher, and a little bit lower then. Gapping down, moving up higher, moving lower, gapping down, moving up higher. All right, what has been happening during this huge bull run? Well, it's been gapping up and ramping and camping is what it's been doing. So it's been gap up, move up higher, or gap, move sideways, then gap up and move higher, and so forth. Okay, that's what it, now I don't have the chart to show go back then, but that's what it was doing. So now we're seeing the cash markets continue to buy into these dips. However, we're seeing it open up as a gap down, which is a little bit concerning as of right now, but there's still key levels that we got to watch out for. You just need to be very patient in these times and very careful trading individual names too. Like we'll get into some of these names. I saw like a 30% drop on open, which is absolutely bonkers. Dow Jones, look at this, just tagging this 31,250 level as support. This is clearly an important level. It was an important level here. It's still an important level right here. All right, we need to now get above the high of today, which has clearly resistance. That is 31,653. All right, still very bullish context. This dip keeps getting bought. Now, if we start sinking below this, that could be a little bit of a cause for concern. But the higher we stay up here, that means the higher these moving averages go. So it's still holding firm above the 20, above the 50, above the 200, and they're all sloping up. So the context is still extremely bullish, my friend. Now, the DIA, right as soon as it touched up on here, we called this out, said, hey, it's running into resistance, be careful. Look at this, tap, 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 and same here with the support. You can see support, 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 support. All right, so this channel, this is consolidation. That's very choppy consolidation, as you can see these big gap downs and then move up higher, gap down, move up higher. You know, so it's just been crazy. Then gap down here, all the way back down, boom, move up higher. So how long is this going to play out until we get a break of either side? Well, first off, the context, okay, we got to think of context. It's bullish, 50 above the 200, okay? So if this resistance is broken to the upside, this could be setting the stage for a very aggressive move to the upside, all right? But we got to pay close attention because we did break down through this support today. Where did it tag? Well, this is a zone of support, right? This gap right here, it tapped the top portion of this gap, which happened to be the 200 period moving average as well. So let's see what happens here in the near future. I don't see a specific trade setup as of now. What I would say is if it breaks down to the downside, you can actually, when it comes down to the downside, you can buy for a long position and then have a stop loss below the support, or you can play a breakout. I would feel most comfortable seeing a breakout take place and then having a trailing stop. And by trailing, I mean I'd be automatically moving that stop as time continues. Yeah, Russell 2000, pull back. Look where it came down to. One nasty red candle, okay? One just nasty red candle pulling down to this gap right here, but it found support, bounced up, lower wick. So the bulls stepped in right here and bid the price right back up above the 20 period moving average. So the 20 period moving average has acted as support here now, here. Yeah, so those main areas, and then also acted as resistance a little bit here and here. So clearly the 20 period is being watched and looked at, and then also this blue channel, you can see it was breaking down, but then got bought right back into it. Price percent oscillator still pointing down. So you got to ask yourself, is this the pullback? And now we're going to be heading higher to break above 230. Well, this 225 level would suggest that we can easily come back up and test 230. Whether it breaks 230 or not is to be seen yet, but you can also kind of see this as a big pull right here, and then this is a flag. And now we could potentially be breaking out of this flag pattern to get above 230 and push even higher highs. But we will see how the market decides to play this moving forward. Structurally speaking, on the weekly time frame, not the biggest fan here because it's completely vertical on a negative divergence. Yes, it got pretty scary to the downside on the weekly candle, but the week is not over yet. It's only been 2 trading days, so we got some time left to see how that plays out. NASDAQ was one of the ones that we talked heavily about, and my exact strategy, what I was looking for today, and it played out pretty great. Okay, we broke down through this. Now, this could be because yields have been going up, right? And the Qs and the tech, you're hearing things about the rotation out of tech into financials, into energy. Okay, well, that doesn't mean that there's not going to be opportunities to still be able to buy into tech. You just need to be a little bit more careful if they are right about the rotation out. And by they, I mean various other chartists, CMTs, all kinds of other people that are saying about the rotation. Now, this is a very aggressive move to the downside, right? 335 down to around 310. The low of today was actually 311 flat, so pretty flat there. Now, this gray line, that was the year, where the year opened. So today we were negative on the year, and then the QQQ's trust got bid back up, back above the 50-period moving average. Hammer candle, lots of volume coming into play here, okay? So pay attention to the volume. This could represent a potential bounce opportunity. Now, keep in mind, okay, just like I said before about bear markets, sometimes you get these huge rallies. The trend is still, higher highs, but now we put in a lower low right here. So we need to see this retake out this high on the chart to see if this move can continue. So you got to be a little careful. We are above the 50. We're below the 20 period. It's now curving itself down, but we could recapture that very quickly. Maybe we just come back, test this channel, and then get rejected to head lower. So you got to be careful. If that is the case, okay, what I want you to see here, that could be a topping pattern. We move up, we retest this channel, okay, maybe we get up to 330, 331, but we don't break out to 335, and then we start heading back lower. That would form a head and shoulders topping pattern. We would need to be confirmed, but that would also suggest the neckline is right where the year opened. So you have a left shoulder, head, potential right shoulder building out here in tech, okay? So you got to be careful for that. Who knows what can happen, but we got to just be mindful of that. Now, if this starts breaking up to the upside, we have one open gap right here that we have to watch out for, and that's right around 330 to close it, so I can see some resistance up in that range too as well. On the 30-minute time frame, okay, this is what we said yesterday. We said, hey, watch for a negative divergence or a positive divergence. It was, but it can get more overextended. Okay, we gap down, move significantly lower. You saw the breakout here of the VXN, which we were keeping an eye on, and then it got, boom, bounced up, higher low, and then ramped up even higher to close the gap for the day and a little bit higher than that. But you can see that there's resistance right around 324. And structurally speaking, this is a bear flag. So let's see how this plays out going into the rest of the day. If we start breaking above this red line on the VXN, this would start heading lower. If we continue to head lower here on the VXN, this could potentially shoot higher. So just watch out, structurally speaking. If it does break down through this bear flag, we can see more momentum to the downside, but doesn't mean we couldn't find some more support at around 311. If it continues to head down there. Right now, there's support at 311, there's support at 314, okay? Now we're gonna look at some stock market indicators. We're gonna first start off on the BP chart because I was digging into this one yesterday. Oversold on the BP chart, positive divergence there. You can see a low here, a lower low, a low here, and a little bit of a higher low. This can stay oversold for a long time, and we can see breakdowns take place when it's oversold. But as last time we noted right here, it was a great opportunity to go long, and you could see it bounce from that area. Now we're even more extended to the downside here on the BP charts, and we're oversold too as well. We have hammer candles forming. So, if it was me, I mean, it is me. I'm taking on some tech positions because I feel like we could see a continued bounce. But I am being very careful on this current position because we haven't been confirmed on anything yet. So this could just be a temporary move, and then we see a continuation to the downside. You got to be very, very, very careful. And if you feel anxious in a trade, chances are you're in the trade without a strategy, or two, your position size is off, meaning it's probably just too big. Here's the BP chart for the SPX. Still has room to go lower, still has room to go higher. Okay, so watch for this to potentially also create a positive divergence. So if we get into oversold territory here, and then this creates a lower low than this one, that would be a really good setup for the S&P 500, where we look at more charts as well to start going long. We're not there yet, but I'll be keeping an eye on it. This is the sell signal, still moving sideways, chopping back and forth, so I'm not going to dig too much into that. But for those that already know, I've explained this many times, get above 0.8. That is the sell signal. We're not there yet. Haven't been there for a while. There's the lumber to gold ratio. Week's still not closed. We're right around 40, so still a risk on environment. I will call out that the 3-week rate of change did go below 0, but the week is not over yet. Okay, so minus 2.4. So if you're a short-termer trader, this would suggest the next week, if this closes on Friday, below 0, that would suggest next week could be a risk-off week. But keep in mind, this is the 3-week rate of change. During Michael Guyad's interview, his his lumber to gold strategy is based off the 13-week, but he said 3-week works. It just could be wrong more frequently, or sometimes it could be right earlier. Here's the night high low, still jammed very high, but we're starting to see it move down slightly a little bit lower, but still very overextended. It's been overextended since the beginning of November, mid-November, somewhere around that range. 94.96. Typically, when it gets into these high areas, you can see sharp pullbacks, and we haven't seen that quite yet, to be quite honest. NYMO, this is kind of one thing that I'm a little concerned with. I would have liked to see more of a move to the downside on the breadth in today's performance, but we didn't quite get it. And if we had a hammer candle form and we saw this, breadth rate at minus 60, I'd feel super, super confident, just like I did right here when the market pulled down into the 50-period moving average on this reading, because it was very similar to what happened here in 2020. It is a lower reading. Maybe we get that reading tomorrow. Maybe we don't. I'm not too sure, but that is just something to keep an eye out on. And then here's the VIX. VIX did get above 25, but it's still held as that kind of key pivot point. So it's a nasty shooting star type candle above 22.5, which also has been a very solid area of support and resistance. Been chopping back and forth. So let's see what happens here. The lower it goes, the higher the S&P 500 could go. This candle on the move up, keep in mind too, this candle, even though we finished down on the day, it's still put in a higher low. So the trend is still higher lows. Now this could be a bear flag where we break back down and then the market can scream to all-time highs. Maybe we get back down to 20. This is what I want to caution and let everyone know. 20 seems to be a key level too as well. Okay, right here and right here. So if we are long stocks, long positions, bullish, right? If it starts dropping down to 20, that's when you want to make sure you're looking at profit taking. All right, because if you're not looking at profit taking when it's down here, but yet we've bounced from these areas, your positions can not necessarily get wrecked, but you might see your positions go into a period of consolidation or slightly pull back. So you need to just be cautious and aware of some support and resistance lines here on the VIX. Now let's look at commodities. We're going to go through these pretty quick. Gold slightly down on the day. Could be a period of consolidation. Gold is still trending down overall, still below the moving averages, the key moving averages, the 50 and the 200, and putting in lower lows, lower highs. So the trend still remains down at this particular point in time. Silver looks better than gold. As we've been saying, the trend is currently up. You can see it's found support at the 50. The 50 is above the 200. This green line is the support that I'm keeping an eye on. If we break below that, that can spell out a little bit of trouble. Maybe we go retest the 200 period moving average. This price candle action right here is not the greatest. Okay, we gapped up and then we came closing below, more than halfway through that candle. So this is some dark cloud coverage suggesting that if we get below 27, where was the low today? 27.28. So about 27. Yeah, let's say if we start confirming a close below 27.28, that could suggest that we have more movement to the downside, or potentially just a retag of the 50-period moving average. Bitcoin up. Nope, not Bitcoin. WTIC. We'll get into Bitcoin after this. Still continues to consolidate sideways, but we did make a new little high today. Not overall all-time high, but you can see within this chart we made that high, and then we came back and closed a little bit lower. So this is consolidating sideways, just within this 60 to 61 range, 61.50 range. We got to keep an eye on this. It has been performing very, very well. And, you can see that in the energy sector as well. It's just been one of the strongest performers. So a little bit of a negative divergence taking place there, but still overall trend is up and positive. Bitcoin, this has been taking a little bit of a nosebleed here, but in the context of things, doesn't look like much. It is a pretty significant move from where it was as a high and then down to 45,000, but we're still above the 50, still above the 200. I want to caution here now, the MACD had the bearish crossover. All right, that was a sufficient crossover. Last time we had the crossover, it went into a period of consolidation and quite sharp pullback from 42.5 to 30,000. So a $12,500 pullback is not small and shouldn't be taken lightly. Now, if you're, a buy and holder and you don't care, then, skip Bitcoin. It is what it is. If you're a trader, even an investor, I wouldn't want to see 20% drawdowns on any individual one of my investments. That's way too much. So yeah, 57.5, this could be a point where we come back into this prior resistance and test it, 42,500. That confluence of the 50 period is moving up, so that can add even more ideals in our favor for a good bounce opportunity, or it might do something very similar to what it did here. It went up, pulled back, bent up, pulled back, lower lows, kept it even right around here, so we'll go up, down, like so, and then potentially break out later, and then try to get that $100,000 level that everyone's been talking about. So look at the dollar. Dollar pulled into the yearly open, and it found some support there, but we're still below the 20, still below the 50. You can see the S&P 500 here. That's that big hammer candle, right? So what's going to take place? Are we going to see this move up? We're going to see this break down, or is this a little head and shoulders pattern? We're just breaking the neckline here of the year. You can see a little left shoulder head, right shoulder here on the dollar, and we're below the moving averages. I don't know. This could be a little head and shoulders pattern suggesting that if we start getting below the yearly open, which makes sense for a neckline, like that's pretty interesting stuff. If we break below that, that can suggest that we're heading to make lower lows, potentially even lower than where we were early 2021. After we opened, we saw a move down below 89.5. So interesting stuff. Bonds and yields, not much of a move, but the 30-year did continue to move higher. The 10-year really just went sideways. So the curve, the 30-5 continues to move up. This kind of went for a pause. Okay, what's going to happen here? It's very hard to tell, very hard to determine. But at some point, if the 10-year continues to rise, there's going to come a point in time where that's just too much, too high of rates for the amount of debt that we have, and it could send ripple effects through many different things, such as our equity markets, or it could suggest new tools coming about, potential yield curve control or something like that with the Fed. But I don't know. I don't think that that's something they want to do. From what I heard today, it's just everything's fine for the most part, right? We're here to support everything, and we got all the tools necessary. No interest rates are going to be moved up, at least as of now. So we'll see how this all plays out. It's very interesting times. So you just got to be very careful, okay? Don't throw caution into the wind during these times. You can't, okay? Why can't you? Well, let's go into the conclusion section, okay? And I'll show you some charts, and then I want to kind of just wrap up where I'm at for the day. So first off, CCIV, okay? This has been a heavily touted stock, okay? It's been running up since $10. It's went up 600%. So yeah, I can see why that more and more people are talking about it. But this is why you need to be careful. Within 4 trading days, it dropped 54%. And anybody that was up here still touting it and even had a stop loss, what do you think happened when they woke up this morning? Like, first off, they would have woke up if they had a stop loss below a certain level and it opened up down here. Their stop loss wouldn't get triggered at $52. It would get stopped out at 35 or whatever that market order is there at right at open. So it would just trigger it right then and get that order in. So they would have woke up with a 30% drawdown or something like that. So very, very crazy. This could spell out opportunity for people that are buying dips. I don't like the looks of this right out of the gate, but it did pull into an area of support. But this is just to caution you that this is why I've been saying you got to be careful. And this is why I've been putting out warnings because of this. Like, that's bonkers. So if you're heavily invested in a single stock like that, this is a blunt reality of what can happen to you. Not to mention we have Tesla, okay? Tesla, from its all-time high there, down 31% in a short period of time, okay? We're talking from a high of the 25th of January to where we are right now. February, like a month. So absolutely bonkers price action in the price of Tesla. This candle is a huge range candle. We're trading below the lower Bollinger Band, and we're moving into oversold territory. Now, this could represent a bounce opportunity, but you got to be careful playing this because of the fact we can see large rallies when things start to turn over, but that doesn't necessarily mean they're going to continue to break out to all-time highs. They can, but this is once again me telling you, this is why I've been saying you have to be careful. I don't know anybody. I remember posting a TikTok video and some guy commented on it like, I can't believe, or he did like a stitch or whatever. I can't believe, TikTok people say, you should be selling stocks sometimes, like when they go down. I'm like, well, this is why I would get out of positions. I wouldn't let myself have a 31% drawdown. And if you're using options, it's more than a 31% drawdown in most cases. So yeah, there's things that you can do to minimize this type of risk. Okay, if you're holding from an all-time high and you didn't take any profits, and then you keep trading down to 31%, that's going to have some psychological effects. And if you're not willing to navigate the markets and you just want to buy and hold, then I don't even know why you'd be watching this far into this movie so far. Here's WKHS. Within an hour of trading, this candle took place. So huge move to the downside. Okay, that was a pretty big gap down, but the follow through was even more intense. All right, we're talking since early February this month, we hit a low of down 71%. Okay, this was also a stock that I would show many times for certain setups. That is very dangerous stuff. Okay, so if you're up here and you're just continue to hold and hold and hold, I hope it gets way back up there for you. Chances are it probably will because of just what the Fed is doing to support everything. So these could create great buying opportunities, like I've already said, but you got to understand there's a lot of volatility in this. We did get oversold here. But me personally, if I were to enter in anything like this, I'd be looking at other time frames, narrowing it down, and I'd be reducing the capital that I put in to them. Because keep in mind, if you're like an options trader, first off, you want to make sure that the bid to ask, there's a tight spread. Because if there's not, and you put an open order, the bid might be 50 cents, and your order gets filled at $1.20 for the options, and then immediately you're just way significantly in the red. Depending on how you decide to trade. So make sure if you are options trading, look for tight spreads, highly liquid stocks, a lot of volume too. You don't want to buy, contracts and, I don't really get into options trading that much, but you don't want to be, to be safe. A rule of thumb is don't own more than 1% of that day's trading volume. If you ever want to get out. So for example, if there's 1,000 in volume, don't take on, don't try to buy hundreds of contracts because it could very well, you could get caught up in a liquidity trap quite easily. That was kind of just a tangent right there. Here's Apple. Apple down almost 20% from its peak there on this specific chart, and that was a very fast drawdown too. All right, now we're starting to see, I didn't have the volume on here, but a lot of volume come in and a nice hammer candle. So this right here, in the tech industry, and what we're seeing about the BP charts and the Qs, and we're talking about all that stuff, this could represent a strong bounce. So these are good opportunities, but you need to still be careful because you can still have inside trading days or gapping down, and retest of levels. Not necessarily that that's going to happen, but if we start breaking above the high, we could see a move forward and going higher. But keep in mind, there's still going to be resistance up ahead. We have the 20 period, we have the 5, the 10. The 10's not up on this chart, but it's going to be swimming up now a river. If you zoom out super far, we're still in really bullish context, but in the daily time, MACD's tripping below zero here, and it's heading down, still continues to move lower. So we'll see how this all plays out. If we start continuing getting these gap downs, and then the cash market buys them up, but we're still putting in lower highs in the market, this is just not a good sign overall. Okay, so I'm running my mouth a lot, but you need to be careful, but you also have an opportunity here to potentially make a lot of money if we do continue to scream to all-time highs. If that was the February pullback based on seasonality charts, hey, all systems a go, and we can continue to move higher. So make sure you're positioning yourself accurately, but managing risk during the process. All right, everybody, that's all I got for you on today's show. See you later.